Good morning, everyone, and good evening for those who are joining us from a different time zone. Welcome to the HashKey Capital call, a fireside chat featuring my colleague Sunny He and Professor Omid Malekan. Thank you very much for joining us. My name is Michael Chen. I'll just spend 10 seconds at the beginning. One, just to thank everybody to joining us. And also, I just want to briefly introduce my colleague, Sunny He, who will be the moderator, the interviewer for this call. Sunny is a member of the investment committee and a deal investment partner at HashKey Capital. Sunny is also one of the very early part of the founding investment team of HashKey Capital, having first joined us as a senior advisor in the US back in 2019. Sunny is now based in Singapore and leading our investment due diligence efforts. I think there's a lot to unpack. There's a lot going on in the news, both in the traditional financial service world and also in the Web3 blockchain world. So without further ado, I think I'll give the floor to Sunny. But before that, I just want to say a very important thing. This conversation and this dialogue is for discussion purpose. None of this is obviously meant for financial advices. So with that as a disclaimer, Sunny, I will give the floor to you to moderate the call.
Thank you, Michael. Thank you very much for organizing this this call. And good morning, good evening for everyone who joined the call. And today, I'm so honored to have our distinguished guest, Professor Omid Malekan, adjunct professor at Columbia University, and the evangelist at City Venture before. And he is also one of my most respected person in this industry that we have been knowing each other for such a long time. And he is always the person that I go to, especially the world changed dramatically, especially for event like this, banking crisis. So, we are so honored to have you, Omid, today and being with us today and, share your thoughts, your insights of what's going on in the banking crisis and how that potentially impact the overall world and the crypto industry. So, glad to have you with us today. Hey, Omid, do you want to have a very quick intro about yourself and, so that everyone can know you more than better than my introduction?
Thank you, Sunny. It's very kind of you. It's good to be here with you since I too value our friendship and our professional relationship very much. And it's nice to be speaking with the audience. Very quickly about me, I've been in the crypto world for 9 years, first as just a hobbyist and someone who was just curious, professionally for almost 6 years. Excuse me. I've written a couple of books on crypto. The more recent one is the one that is now kindly Michael made his background, called Re-Architecting Trust. That one came out last year. I work as a consultant and an advocate, usually at the intersection of the crypto world and traditional industry and traditional finance. So as you mentioned, I was at City Ventures, which is the corporate VC arm of Citibank, for 3.5 years as an in-house crypto expert. And I've also done advising and consulting for a whole bunch of different crypto startups and big companies. And the kind of stuff we're actually going to talk about today is what I spend most of my time on, including, and I also, as you mentioned, teach crypto at Columbia Business School, where I've been for almost 4 years.
Great. Thank you so much for the high-level overview, but I know that you have more experience than what you just told us. And, you actually has predicted the potential banking crisis in almost like 3 months ago and in your blog and some of your interview. So I know the audiences must have followed some of the information, but can you give us a quick recap of what has happened in the past 3 weeks in the banking industry, in the crypto world, and what really driving the driving force behind all those crises?
So the crypto part of the crisis is actually, in some ways, a relatively minor role. But what happened in the US is that because big banks have traditionally hesitated to serve the crypto industry, there was a concentration of deposits at a couple of what we call regional banks here in the US. The American banking system is fairly unique because we have thousands and thousands of small banks in America. And a few of them serve the crypto industry, and it just benefited everybody in the crypto industry to be at two banks, basically, because it was easier to make payments among each other. And because of the bear market and everything that happened in crypto last year, those banks had significant losses of deposits. And one of them, compared to the overall banking system, very small bank in California called Silvergate Bank, just voluntarily shut down a few months ago. But that, in a way, began this cascading series of events that ended up turning into a full-blown banking crisis. And the big banks, though bigger banks that failed, were Silicon Valley Bank in California and Signature Bank in New York, which was also a crypto-friendly bank, but it was not the primary thing that it did. And the combination of factors that led to these banks having bank runs, which we had not had for years, is one, because of all the stimulus that was created during COVID by the Federal Reserve, all the banks had seen their deposits swell massively. And when banks get a lot of deposits, they need to put that money to work. So ironically, most of these banks did a relatively safe thing, which is they just bought US government bonds with that money. But they bought those bonds at a time where interest rates were extremely low. This is in the last 2 years. Then in the last 12 months, because inflation picked up, the Federal Reserve, as everybody knows, has been raising interest rates, as have other central banks. And everybody remember their high school econ class, when interest rates go up, the value of bonds go down. So ironically, even though these banks didn't do the kind of really risky lending that was the culprit in 2008, they did see the asset side of their balance sheet shrink significantly, which in of itself would not have been a problem, except that some of their deposits started to leave. In part because of what happened with the small crypto bank, in part because their depositors were other tech companies and other people that, with a slowing economy, had less money. But this created a very unusual situation where these banks like Silicon Valley Bank on their books were sitting on massive losses because of their treasury. Even though they had US treasury bonds, they had declined in value, which would not have been a problem if they could have held those bonds to maturity. They're going to get back $1 for every dollar they invested plus interest. But because they were facing depositors pulling out, they were forced to start selling some of these at a loss. And this began this dangerous feedback loop where, as word got out that these banks are losing money, more people started pulling their deposits. And their deposits, one of the lessons actually I think the world learned from this is that bank runs in the age of social media and technology and chat groups happen a lot faster than anyone, including the regulators, were ever prepared for. And the last thing that happened here is that historically, there's always been this important lesson that banks should have very concentrated deposit bases, not just exposed to one industry, whether it's crypto or tech or VC. But it so happened that these banks in question were concentrated in some of these. So long story short, the US government intervened and it basically decided to bail out these two banks, Silicon Valley Bank and Signature Bank, because the fear was that if they were allowed to fail, and a lot of people, those who had deposits above how much is insured, they would lose money, and that this would lead to panic across all of the small banks in America and potentially bigger banks. And that crisis did in some ways also even spread to Europe because of what happened with Credit Suisse. And there too, there was a government intervention and a marriage to UBS. So right now, it looks like the situation has somewhat stabilized, but deposits are still coming out of these small banks because people are scared. And one of the things that we know from history, and I actually have like a lot of the history of bank runs in my book, is that once the panic starts to grow, it's really hard to get things to calm down. Because ultimately, like, the cost of transferring your money out of a bank into a much bigger bank, or even to like a money market fund, is zero. There's just a bit of paperwork and friction. So once people realize that they could lose money, they decide to pull their money first, and then they'll decide if they can bring it back later. So that right now, at this very moment, there's this open question of, are these runs going to continue? Is the US government going to expand the bailouts? So forth and so on.
So, with all information that we have, seen today, this time the government, the U.S. regulators, has stepped in very quickly to prevent the potential rippling effect and try to save or bail out all those small banks. And but on the other side is that we do see that the market confidence doesn't really regain, and seems like they're not seems like the thing is continue to evolve. So is this really crisis is stabilized, or is it more big crisis that you are foreseeing potentially coming into this market?
I think you're right about, actually, if you look at the share prices of a lot of these remaining small and regional banks in America, a lot of which lost half their value, 70% of their value in the last few weeks alone, they have not really recovered. So there, the market is not very confident. But even if the banking situation stabilizes, I doubt that we're completely out of the woods, just because as someone who has spent a lot of time studying markets and financial history and also human nature, if you think about what's happened to the global interest rate market and the global bond market and debt market, it's been this remarkable thing that there was a bull market for something like 40 years. If you just pull up a chart of interest rates in most developed nations, you will see that from the 1980s up until a year ago, they just went down. And there's a generation of traders, investors, people who've never dealt with significantly rising interest rates. Obviously, the exceptions are in the emerging markets, but in places like the US, Europe, parts of Asia, it's only ever gone down. And suddenly, in the last 12 months, because of the inflation and central banks reacting to it, there's been a radical reversal. So as a student of history and human nature, anytime a long-running bull market comes to an end, there's usually a major crisis. There's also usually a scandal. And this is something us crypto people unfortunately know all too well, because in crypto, our bull market ended a little sooner than everybody else's, and we had a crisis where there was too much leverage and a lot of firms blow up. And then we have the scandal of this major exchange, FTX, turning out to have lost their client money. So I still expect for there to be something like that out there, something far bigger than a couple of small American banks. And a lot of people ask me, like, oh, does this mean there's going to be another 2008 crisis or like crisis? And as the old saying goes, history doesn't repeat, it rhymes. And part of the problem with financial crisis historically is usually regulators overreact to the last crisis. And they set rules in place to prevent that from happening again. But then what they miss is some new emerging crisis that nobody sees coming.
I mean, I still remember one of the in our previous discussion that you do mention that what is happening today in the United States or in those developed market like Europe market is exactly like what has happened in the developing countries like Argentina, or which just the history just repeat itself. But the countries like US has never experienced this before, with high inflation and low growth rate, and the regulators sort of cornered into a particular place that they have to find some way to get out. But we can always, if the audience has any further interest, we can always come back to this question later. But we definitely cover a lot of crypto and blockchain industry. How the overall banking crisis impact the crypto industry, especially two major industry bank, Silvergate, Signature, basically go bankrupt within, I think, within 10 days. And Signature, even without any public information, they just claim bankruptcy immediately. what does it mean to the industry? And also, is it, I don't want to create any conspiracy, but seems like right now, U.S. government is very directly hostile to this industry right now. Like, you are sitting in New York and very close to the regulator. Can you tell us more about the sentiment in the market and what's going on to the crypto industry right now?
So at this point, I actually don't even think it's a conspiracy theory. The U.S. government, at this moment in time, through various financial regulatory agencies and the bank regulators, is outright hostile towards crypto, to the extent that, like, they've told, the government hasn't told the other banks not to serve the crypto industry, but they've done something which is in some ways worse, which is they say, well, you can do whatever you want, but we think crypto is really risky. So if you do decide to bank significant number of crypto companies, we're going to have some questions, which anybody who's worked in banking, you never want your regulator to have reason to ask more questions. So it's actually like, I talk to a lot of major crypto companies here in the US, and they're having a hard time finding bank accounts, which is not, ironically, it's not new. So much of the history of the crypto industry and the way it has evolved is because in many ways it was impossible to get bank accounts, right? Like, it's really bad now compared to 2 years ago, but 8 years ago it was impossible. So people in the industry have been saying there's a lot of friction, it's very difficult, but we are used to this and we've had to deal with this problem forever. So people are looking to diversify their business against multiple banks. More and more you hear about even US companies looking offshore for banking services. Obviously, it's not ideal if you're dealing with dollars, which they all are. You'd rather bank through US domiciled places, but there's plenty of ways to get dollar access outside the US. So on the one hand, there's that friction, which has manifested itself actually in the crypto markets in some ways. Like, liquidity is down. Some of the trading volumes and some of the exchanges for things like Bitcoin are way down. And that's literally because the normal market makers, traders, arbitrageurs, who are normally in and out of the market, making it more efficient, they've had to pull back their activity because they have banking issues, or they have a hard time, they can trade crypto, but then they have a hard time moving dollars on the back end. So, and it's not just the banking regulators, right? The US capital market regulators, like the SEC, are also they're making life very difficult for American crypto companies right now, worse than it's ever been. But to me, crypto was and is always going to be a global phenomenon. And America's loss is in many ways the rest of the world's gains. And at the same time that the US government has become more hostile towards crypto, many jurisdictions in Europe, the Middle East, and Asia have become more accepting. And they've actually created regulatory frameworks that companies are happy about because they're sensible rules. Most major crypto companies want to be regulated. They just want to be regulated in a way that makes sense for digital assets. And they're seeing significant traction. So I think the next couple of years is going to be an interesting phenomenon where we're going to see more and more activity leave the US and start to be based out of those other jurisdictions.
Can I follow up question here? What is the driving force, or what is the intention for the regulators in the US, take this more like partisan consensus towards crypto, hostile, approach towards crypto right now? It's very abnormal, I would say, for for the legislator or the regulators to go this way.
I agree, and even I have been very surprised as to the extent of the hostility, and some of it is just in bad faith. Like, you're seeing major government officials do the kinds of things that are just not really their job, and sometimes they act in ways that are just bad faith, and it's low integrity. Like, everyone in crypto knows that the bank regulators have been ordering banks or telling banks that they were going to come down harsh if they do accept crypto clients. And yet, just yesterday, America's biggest bank regulators were testifying in front of Congress, and when they asked if they did this, they said, no, absolutely not, which is not how these things usually work in the US. I've been thinking hard about this. I don't think there's any one reason why the US government has become like this, but if I had to list a few, one is to a lot of people in the US government that are hostile towards tech and big tech. They just view crypto as like the latest version of big tech. So whatever dislike they have for a company like Facebook, they project it on crypto. I mean, this is especially true for people, the Democrats here. Two, I think some of them are just misinformed and they're getting advice and suggestions from a small group of academics and critics and not opening themselves up to a broader audience. And then three, I think the ultimate thing is you know, I hate to say this as an American, but this is a form of American arrogance or hubris that like, you know, if crypto is going to be a force in financial services, then, well, America might not want that. So America might not give it permission to be, right? It's like, it's something that, and I've actually met regulators who say, well, if this crypto thing is going to happen, then we'll decide when and how and if it happens. And I just tell them, like, that's not how anything works. It's certainly not how technology works, and definitely not a global borderless technology that can be based out of anywhere. So, and the real irony of this is, I think the more hostile the US government acts towards crypto, the stronger the signal they send to the rest of the world to adopt crypto. Because as everybody knows, you know, America dominates the global financial system. The dollar is the global reserve currency when it comes to things like laws and regulations. America often tells the rest of the world what to do, and in ways that the rest of the world is not always happy about. So the way America is acting towards crypto is, I feel like they're sending a signal to everybody, every other government official in every other country, like, the US seems to really be scared of crypto as a threat to its financial dominance. Oh, great. Well, we'd like to find an alternative, or at least like a backup of some kind. So I think we're going to see the longer America stays hostile, the more we're going to see other governments suddenly become more accepting and friendly to crypto.
You know, as a crypto maximalist like me, it's like the more there are just so many people and so many things trying to crypto, and everything that didn't really like kill crypto and makes it even stronger and make it even more decentralized. Yeah.
Right.
And how is the crypto performed, and you know during this period you know, as you can capture in the market, and what do you see, you know, there something interesting there?
So the real interesting thing is that it's performed well. If anybody's followed the price of Bitcoin, for example, initially when the problems emerged with the banking crisis, some of it's like badly affected crypto, like a major stable coin, USDC. Stablecoins, for those who may not know, are blockchain tokens that are tied to fiat currency like the dollar, and they're actually very popular. And the way they work is some company puts dollars in the banking system or in US Treasury bonds and issues tokens against them. And one of these companies, Circle, had $3 billion at Silicon Valley Bank. So for 48 hours, when it wasn't clear whether they would get bailed out or not, their coin lost its peg and it wasn't trading at $1. Then it recovered. But the price of Bitcoin at that moment in time was at 20,000. It's now more like 27, 28,000. And this has surprised a lot of people, but there are two reasons why. One is there's a general perception that because of the banking crisis, the Federal Reserve is going to be less hawkish. So they're going to slow down the pace of rate hikes, and it's potential that they'll actually start doing rate cuts at some point if things get really bad. And this has benefited, this macro theme has benefited all sorts of markets. Gold has done well, some stocks have done well, etc. But I think the other reason why Bitcoin specifically is doing well is, to me, Bitcoin is and always has been like a sort of insurance policy against problems in the existing financial system. Because whatever anyone's opinion of the price of Bitcoin, and I I'm not a trader and I never get too caught up in the price. But the one thing that makes Bitcoin very unique was that it is a currency that has its own financial system and it has its own legal system. And it's all achieved with technology and cryptography. This is very different from how the rest of the world works, where you have currencies issued by governments, and then it moves through a regulated banking system, and then things are adjudicated in that country's legal system. And I think, frankly, like, people are starting to slowly lose faith in the traditional system. It's, increasingly erratic. There's more and more crises. And then the regulators in some places, or even central bankers in some ways, seem like, at best, they're not sure what they're doing. At worst, maybe they've become too political or they've become compromised somehow. And Bitcoin is a sort of hedge. It's like an opt-out mechanism. It's like, you know what, I don't want to deal with all this money printing, inflation, bank regulators relying to Congress, whatever. So I'm going to opt out. That doesn't mean, I know there's some radical crypto people who think like the dollar will collapse soon and the price of Bitcoin will go up. That's not what I think, but like any other insurance policy, if it's like you're buying flood insurance and it's raining more and more than it used to, then that insurance becomes more valuable to you.
One thing that you just pointed out, that right now people started losing faith in the traditional financial system, and on the other side is that Bitcoin price, like from the time it got invented till now, like almost 14 years, and the price just keeps going up, and across all the history. But this is one thing that has always been puzzling me, probably across many industry players, is that Bitcoin was invested and grow and thrive in a low interest rate, high liquidity market scenario. And right now, the whole financial system seems like shifted to the other way around, and shifted from quantum easing to quantum tightening, and the money from a commodity changed to very precious asset. So like Bitcoin has never grown in this stressed environment before. And how do you perceive, like in a new setting and environment, would that potentially change the way Bitcoin perform or the cryptocurrency perform itself, or it will just continue to thrive, given it has been so decentralized and has been driven by the community? So what's your thoughts there?
One of the things I love about crypto is that it's all new, and we're not sure what any of it is. Like, I have theories about what Bitcoin is, but they're just theories, and other people have different theories, and my own theories have evolved over time. So we've seen Bitcoin go through these periods where it catches these different narratives or stories as to what its value is. And actually, the idea that Bitcoin is what they call a risk-on asset, that it's like tech stocks and other things that go up in value when interest rates are low and central banks are injecting liquidity, and then they fall down when the opposite is true. That's relatively new in the history of Bitcoin. I mean, in the long run, yes, right? Like across the span of years, like if every country is going to have too much inflation, then Bitcoin is appealing because of the fixed supply dynamic. But one of the homework assignments I give my students is to actually like go crunch the numbers across the history of Bitcoin and compare it to the S&P 500, to gold, to US Treasury prices. There is no clear pattern there. There are times like during COVID when Bitcoin does move with these things, and then there are other times where it moves opposite. So I think what we're starting to see now is another shift in. There were certainly people who bought Bitcoin in the last couple of years because they thought, oh, inflation had, and those people have now sold because the Federal Reserve and other central banks have been raising rates. But I think the narrative for Bitcoin now is going to shift increasingly to like this, what I said earlier, that it's just sort of an insurance policy against financial instability of any kind. And let's not forget, Bitcoin is just one part of this picture, right? You have other kinds of cryptocurrencies and blockchains like Ethereum. Yes. And then increasingly, you actually have applications that are built on top of them, and those have their own value propositions.
That's right. I mean, I think this just goes back to your content to your book to the level that you have envisioned that the whole financial system or the trust system will have to be re-architected. Can you tell us more about that? Like, given all the new crises happening right now and the whole global financial market change right now, does it reinforce your thoughts or your conviction in the book, or it change or evolve somehow? Can you tell us more about that?
Yeah, I, as the title of the book implies, I look at everything through the lens of trust, because I think trust is so fundamental for everything in society, and certainly everything that matters, right? Starting with financial services and moving on from there. And one of the things I see everywhere is that so much of our different trust frameworks, the way the institutions and laws and rules by which we as a society come to work together, they're falling apart in the digital era. They were just not invented for the digital era, right? Like, a lot of the design of our banking system has not changed for over 100 years. I mean, sure, like we have mobile wallets now and fintechs now and stuff, but the architecture is exactly the same as when people used to send telegrams that it would take days for anything to actually happen. And that's just one example, right? Like a lot of the problems we're seeing with big tech, the controversies out of things like surveillance capitalism and big social media platforms that collect data and aren't always honest with people. That's because those are corporations, and corporations were not invented to run platforms. Corporations were great when the thing to do was to build refrigerators. But now we live in a world where intangible things and data and digital assets are extremely valuable, and it doesn't really make sense to say, like, oh yeah, let's take all the digital assets of several billion people and make them sit inside one corporation like Facebook, where one person literally controls everything, because Mark Zuckerberg has more than 50% voting power. So the running thesis throughout my book is that the different facets of blockchain and crypto, everything from how Bitcoin works, but then on to like tokenization and smart contracts and decentralized applications, they're just a better way to build trust in a digital world where data matters more than products increasingly, where everything happens 24/7, including bank runs, and where, as this the Zoom conversation between you and me and you indicates, borders don't matter as much as they used to.
Yeah, I feel being in this industry, the beauty thing is that there's just so many exciting things, that innovation happens that you cannot really predict it, and also in the meantime, that the way that you are looking to the Bitcoin or the cryptocurrency smart contract bring in this world is really changing the way that people work, collaborate, and organize together. And for the audiences today who are interested to read more about Professor's book, feel free to drop us an email, and we will send you a copy of the book. And also, in the meantime, we try to have this conversation engaging. If there's any particular questions, feel free to drop in the chat room, and we will definitely talk about that. And talking about the re-architecture, the trust, and decentralize of data, or all the new fashions. Is it like there's so many things happening? Is it a particular thing that you're just excited about in the crypto world, or that potentially will reshape the industry or even reshape the whole world?
Just a couple of examples of things I'm watching closely. One is what I mentioned earlier, this idea of stable coins, or you can think of it as like using the blockchain as just new payment infrastructure for existing currencies. So happens that dollar stable coins are very popular, but we're starting to see more and more stable coins in every currency show up. And in fact, when I was talking about stable coins in class today, the way I talk about them is, I ask my students, like, who's ever had to, excuse me, send a wire transfer cross border? Everybody has had to do it at some point. A lot of my students are international, so that's how they pay their tuition. And it's a nightmare. And it's like all this information, and it might take days, and then the payment might not go through. And then I do a demo where I just send a couple of dollars using my digital wallet to somebody else via stablecoin. And then we talk about like, okay, this was almost instant, and it finished in a couple of seconds. And someone would say, oh, but we have mobile app payments like that. I'm like, yeah, but I can't use Venmo, which is popular here in the US, or whatever popular app in a country in Asia. I wouldn't use that if I'm a corporation. I wanted to send $1 billion across the world, but you could with a stablecoin. And then there are all these other features where it's programmable and you can have the money live on the same infrastructure as other assets, right? Like today, every country has a system for payments, their currency, and another system for stocks and bonds and real estate. And then it's really hard to make these systems work together, and you need giant corporations in the middle that say, okay, I'll take the dollars here and do the stock transfer there. But when we move to a blockchain world, like this idea that the money now exists on the same infrastructure as all the other assets is very powerful. So I actually think stablecoins are going to be a major disruptive world in the payments industry. And then increasingly, we're going to see like major payment providers like here in the US, we have PayPal, Visa, MasterCard, but then also like the more powerful regional ones start to adopt them. So that's one cool application, which actually, it's not about speculating, right? Like it's not about I'm going to buy Bitcoin because I'm going to make a lot of money. It's like, I have a problem. I'm a large multinational corporation, and I need to move currency around constantly to pay vendors and pay payroll. And today I have to rely on the banking system, which is very slow, inefficient, expensive. Oh, but if I can do it on the blockchain, then it just saves me time and money. The other thing I think is very cool is this world of NFTs, or digital collectibles, is really starting to take off as a new way for brands to engage with their customers. So whether we're talking about major companies like Nike or Starbucks, we're seeing like every day one of these companies that says, oh, we've come up with a new loyalty program that involves our customers do something, and then we send them a non-fungible token or a digital collectible that's a sticker, a coupon, a work of art, whatever the company wants it to be, and it sits into their digital wallet. But then now, because it exists on this other infrastructure, we can combine it with like airline loyalty rewards that you collect. And if you get like 10 of these, you get to go and get into a free VIP party or something. A lot of my students who come from the world of marketing and branding are very excited by these, because it's a new way to build brand customer loyalty for companies to interact with their existing customers, attract new ones. And we're actually seeing like even cool experiments with things like even event ticketing, that like you get this NFT from a company that based on some good thing that you did, but then it's also the ticket that you can use to go to a different event. So I would keep an eye on that one, because it's also just not controversial. Bitcoin's controversial, even stable coins are somewhat controversial, but like Starbucks giving people digital collectibles for like going on their website and watching a video, and then you can use that to get a discount on coffee or something, that's just good for everybody.
NFT is definitely one of the areas that we studied the most. But today, I would be also curious about your thoughts on what potentially the new form of, what potentially the form of stablecoin that you are envisioning, for the reason that right now 2 major stablecoin, USDC and USDT, and like they are packed with US dollars, where yes. That basically one of the major reasons of the financial crisis. So what potentially the new form of stablecoin? Would that be potentially something, packed with Bitcoin, or, even algorithm driving stablecoin? But there are some failures about algorithm driving like Luna UST. This is definitely something that I will would like to have your thoughts because Casey Wood and her mentor author just have a most recent like YouTube, and they're also chatting about this topic and chatting about is it possible to limit the quantity of the value rather than limit the number of the issuance. So just curious about your thoughts about the new form of stablecoin and how potentially that like stablecoin should be involved to really utilize its value.
There's a couple of different models for which one can issue a stablecoin, like you're saying. There is the Tether USDC one, which is that the coin is backed by hopefully some combination of cash in bank accounts and what we call like cash-like securities, like very short-term government bonds. For those who know, that's actually also like just the money market. We've had those for many years. It's just money markets today exist in the securities system. So I can buy one and hold it to earn interest, but I can't pay you with it. So to me, like a money market that I can use as a payment instrument is interesting. Not to be underrated is you could just have banks issue tokens as the form of what we call demand deposits, which is like a checking account.
Yeah.
Like ultimately, if a bank could say, hey, Omid, you have $100 in a checking account, but if you want, I can convert it to $100 on a blockchain as a stable coin. As far as like bank structure is concerned, it's exactly the same thing anyway. It's a demand deposit, meaning somebody could get their money back at any point. But the form factor is very different. Right? Accounts is just something static that you can't do much with. But if it's a token, I can send it to somebody else. I can use it in DeFi. I can program it. The only reason that hasn't happened yet is regulations. But the one benefit is, and I think eventually when banks get permission to just tokenize their deposits, they can pay interest on it. Because right now, like Tether and USDC, they're not allowed to pay interest because then they would get classified as securities and the whole thing for tax reasons would be bad. And by the way, that's ironic. It's like they're making a lot of money right now because combined they have over $100 billion in these tokens, which means that they have $100 billion that even in the safest US securities, they're making 4.5%. So those two companies are making $4 or $5 billion a year. And the regulator is saying, like, whatever you do, don't share that with your users. So I think that'll change. I think eventually sane people will show up and regulate these things. So tokenized bank deposits is another form. Then we have like the over-collateralized model that already exists, like a MakerDAO, where you say, well, you can back it up with some combination of crypto assets. That's already out there. It's just not very capital efficient because you have to over-collateralize. And then as for I'm still very skeptical of the general algorithmic model, like the Terra UST model that didn't work out and failed this year because it just relies a bit too much on circular logic. But it is possible that someday, the one thing that UST did not have was demand for people using the currency as just a regular everyday payment thing. So it is possible that if a stablecoin one day becomes widely adopted in an area as just a thing that people use to pay money, then it could be a bit more of the algorithmic model and doesn't need to be like a bank account.
And one of the point that you envision about the stablecoin is exactly aligned with one of our portfolio, a custodial bank. I think you're familiar with him, Kathleen Long, and they are one of the bank or that trying to do, a bank-backed or issued stablecoin. And this is, also brings back to the regulatory interesting, I would say, struggle and dynamics in the US is that, for instance, states like Wyoming, Miami, they are on the side of proing or supporting the cryptocurrency. On the other side is the federal or some different other states sort of hostile. So overall, the policy is even within the US, sort of is conflicting with each other and in a sense. So we'll be curious about your thoughts, how that will potentially evolve from the regulatory perspective, how potentially the policy or the attitude approach towards cryptocurrency, on the state level or on the federal level that will evolve towards cryptocurrency, and how the company potentially right now, I feel, even when we talk to our founders and some of the investors in the US, they definitely feel the pressure. But and even thinking about to going now to explore subsidiary in APAC region or Dubai. How do you see the regulatory side that potentially evolve in the next several months or even like years to come?
So in the next several months, it's still not going to be good. But in the years to come, I do think eventually the US will realize the error of its ways, because the examples of the ways the regulators are failing are piling up. Even the Custodia, the irony of Custodia was that part of their plan was to take crypto deposits and then just park the money with the central bank, the safest bank in the world. And the Federal Reserve has for years denied them a license to do that. If that bank existed, then we wouldn't have as bad of a banking crisis as we did, because the people who were their customers would say, well, my money's safe. I'm not going to need to withdraw it. There's no run on the bank. So this is like the way that a lot of the government's actions are just backfiring, and it makes them lose credibility. So eventually I think they'll come around. But specifically, I think the one thing to watch in the US is the court system right now. Because if you think about like the three parts of the government, you have Congress and the legislature that passes laws. They're just too polarized and they can't make up their minds, so they're not passing any laws. Then you have the executive branch and the presidency and the regulators who are doing all the harsh enforcement that's driving the crypto offshore. But then you have the court system. And there are some very important lawsuits right now where the regulators have sued crypto companies or crypto companies have sued regulators. And I think a lot of important decisions this year, very impactful decisions, determining things like what kind of products are able to exist, whether like tokens are securities or commodities and which regulator gets to control them, whether we get a ETF. America is one of like the few developed countries that doesn't have a Bitcoin ETF, again, because the regulator is hostile. So I think the courts, if the industry wins some of these court trials, it's going to make a big difference, because then the regulators are going to have to back down, and that might also finally get Congress to get together and pass some sensible laws.
Yeah, I think this is let's see what's going on in the US market, the regulators' perspective. I think it's just definitely have a global impact. And I think we just have a quick question from the audiences, which potentially just answered in my question as well. But just in case that we miss anything, the JP Morgan has informed employees that the bank will be embracing crypto within the 3 years. And do you think the regulations to the space now will benefit the industry in the future, or do you speak with the regulator and share your insights in the network? Or if so, would you lean towards tough regulating the industry for long-term stability, or more like loose regulation, keep it dynamic and for the short term? More like your suggestion or your thoughts, which should be the right approach if you were the regulator?
So if I were the regulator, and this is actually what I try to point out in the book, there's a lot about crypto that regulators should love. And just to give you like some simple examples, right? Total transparency. Transparency is very important for building trust in a financial system. And the existing system is extremely opaque. Like nobody knows what's going on inside the big banks at like JP Morgan or Citibank, where I used to work. Not because anybody wants to do anything bad or is hiding anything, but because they have these complex, very, very old systems that take a long time to update and reconcile. But if we're talking about decentralized finance, as you know, even as well as me, Sonny, like we can go and look at lending protocols and trading protocols, and everybody knows exactly what's happening every second to the penny. So that's great for regulators. Then you have this idea of automation via smart contracts. The example today in class, we were also talking about DeFi. I told them about this example where like people borrowing against a valuable asset like margin lending for stock trading or the repo market. It's a very common thing in TradFi too, but And there should be fixed rules, right? Like if you have this much in collateral, you can borrow this many dollars, and that's the interest, and this is when you have to repay it. But those rules aren't always followed. The people who make, there's a lot of discretion in the banking system, and people make mistakes, or sometimes like they give someone more leeway because it's a friend or an old client. There's none of that in crypto because the smart contracts have just code. If this happens, then do that. And they don't care who I am. They don't care who you are. We get the same treatment, same interest rate. And if one of us needs to get a margin call, there's no like calling the broker and say, hey, we've been friends for years. Give me till Tuesday. I promise I'll repay the loan then. That happens in banking all the time. Doesn't happen in DeFi. It's code. There's nobody to call. So I think that in the long run, the regulators will come and see this and embrace this. And then that doesn't mean there'll be no rules. It's just that they'll pass different rules and create new laws that you regulate a decentralized financial protocol very differently than a bank. One thing to our guests who asked the question, it's always really hard to tell what's going on with the big places like a JP Morgan, because like the CEO, Jamie Dimon, was on CNBC a couple of months ago saying once again that he thinks Bitcoin is a fraud. But then JP Morgan private bank has Bitcoin funds that their clients can invest in. So that's weird to me. And I wish somebody would ask him like, wait, are you selling a fraud now to your clients? So there's a lot of mixed messaging and stuff, but ultimately the big US banks have the most to lose from crypto because they're like, like to me, JP Morgan is the poor man's Ethereum, right? Like in the old world, how do I send money around the world or transfer securities or something? I have to go through one of these like 10 big banks. But in the world that I described, where everything's a token and smart contracts that interact, I can do that faster, cheaper, in a more trustworthy fashion that I could at a big bank. So this is why I think the big banks, particularly the big American banks, are very hesitant and resistant. And ultimately, they'll be too late. I'm sure eventually all the big banks will be doing all the things with crypto, but by that point, the world would have moved on.
I know that you're the person who has been trying so hard to bring the potential, impact of cryptocurrency to those big dominant banks, and having those leadership to realize the potential future that they can leverage out of that. Otherwise, they will have a big threat there. But hopefully, they listen and take some action. But thank you so much for all the questions and all the discussion today. And we have so many other talks that we can cover, but given the limited time, and we can just cover that much. But I'm just so honored to have you with all the audiences and with me today. And I think we definitely have great insights and learn a lot from this conversation. And Michael, how about I just pass it over back to you?
Yes, well, a big thank to Sunny, of course, for moderating this thought-provoking dialogue conversation this morning. And of course, thank you, Professor Omid, for spending the time. I know it's late in the evening in New York time zone, so really appreciate it. And I think I just want to mention briefly before we wrap the call that, Professor Omid, did write a number of books on the subject of, finance, and in particular, digital assets and crypto. One of the book is called Re-Architecting Trust, The Curse of History, and the Crypto Cure for Money, Markets, and Platforms. So I think if any person or anybody from the audience today is interested in getting a copy complimentary from HashKey of the book, please just send me an email, with your basic contact informations, and I shall get a book to you. I think most likely it will be a Kindle e-version, so you don't even have to worry about it that, what if I'm traveling in Thailand and I couldn't get the actual shipment. I'm not here to talk too much about the book, but I am reading the Amazon, just now, and the first praise for the book is, of course, from another person that I respect, trust a lot. That's Nassim Nicholas Taleb, the author of Black Swan. And he said, I rate you must read Omid. He is the best person to agree and disagree with on the subject of cryptos. You learn both ways and enjoy the argumentation in the process. I think that sort of sums up quite a bit about the discussion of crypto and digital assets today. Is we can definitely agree or disagree, but crypto is here to stay. Digital assets here to stay. So we might as well try to learn both ways and enjoy the argumentation in the process. So I'm piggybacking on Professor Talib's praise. So copyright to him. But at the end, just want to say thank you again to Sunny, to Professor Omid, and my email address is michael.chen@hashkey.com. I just typed it to in the chat box. That's michael.chen, so CHENE like Eric, @hashkey.com. So if you are interested in getting a copy of the book, send me an email and I will make sure that's done. Thank you very much. And we are at 10. And that's a wrap. I just want to say thank you to my esteemed colleague, Trevor, and the marketing team as well for organizing this as always. Okay, guys, that's a wrap.
Thank you, everybody. It was great conversation, Sunny.
Thank you, Omid. Thanks for being with us.
Our regular catch up. Yeah.
Yeah, absolutely. Bye. Take care.